Hi everyone, thank you for visiting our channel Stocks Current Affairs, where we share with you trending stocks which are good for long-term investments. Please like and subscribe to this channel as it motivates me to prepare more such content for you. In this video, we'll talk about why CDSL is a great investment for long-term. Let me take you to my screen and share insights about this stock. So before we delve in detail about CDSL, let us try to understand what is Demat account, an account where stocks or securities of investors are held in electronic format. A couple of years back, stocks were traded in paper format and it was very difficult to keep a track of. But right now you see all these stocks in electronic format and maintained in Demat account. So if you trade in stock market, you must definitely have a Demat account, else you can't trade. Now let us understand what's the current market in India. The number of Demat account holders in India continues to grow, and as of 2022 it was 8.4 crores. It grew to 11 crores as of January 2023. There's whopping 30% increase. As of June 2023, this number reached 12 crores. Can you believe 12 crores accounts? Now let us try to understand where India lies. And there is long way to go, as you can see. If we compare India with other countries, only 8.4% of Indians invest in stock market. If you compare this number with US, UK and China, there are a lot of people who trade and are invested in the stock market. So you see a lot of potential in India. Then that would translate into a lot of Demat accounts. So let's try to understand what is driving this trend for investing in share market. During COVID, low interest rates for FDs made people to look for other options. Definitely, there were other instruments that were performing well, and stock market being the one which people liked, and there was surplus of cash, so they opened new account, Demat account, and started trading. Second point is ease of trading through apps. These apps are dominated by discount brokers, Zerodha, Upstock, very good user interface. These are discount brokers. So it has helped people to save money, trade more. So people started to look at alternative investment options other than gold, land and bank FD. Stock market being one good option, people choose it. Disposable income of salaried employees are growing. As a result, they have surplus amount to invest in stock market. So this has resulted people to open new accounts and start trading. Last year we saw this update coming into picture. The Insurance Regulatory and Development Authority of India (IRDAI) has proposed to mandate dematerialization of new insurance policies. So as we just saw, shares in paper format, now in electronic format, the same thing is going to happen with insurance policies. So we could see good influence on growth of Demat accounts. Which share is ultimately going to get impacted? It's none other than CDSL. Let me take you to the CDSL share and show you how it has performed. Okay, so past 1 month it has given around 15.3% returns. Past 5 days alone it has given around 5.72% returns. However, if you see YTD, it has given around 4.19% returns. As I move ahead, past 5 years, you can see the stock has fallen from a peak of around 1615. The stock has fallen from 1615 and currently trading at 25%, approximately 25% discount. So I wanted to show you an important point. Let me take you to screener. We can see the market cap of CDSL is 12,616 crores stock P is 45.7. You can see ROC and ROE. ROC is 31.6. Return on equity is 23.9. These are very good numbers, face value of 10. As I moved down, what I wanted to show you was yearly performance. The sales of the stock is increasing from March 2020 to 2023. There are hardly few companies who have operating margin around 62%, 66%, and 57% respectively during March 2021 to 2023. And how CDSL earn revenue. 60% of revenue indirectly from demat account, that is transaction charges, transaction levied on buying, selling, or transfer of securities. So as you trade more, you give more amount to CDSL. For example, today you buy Reliance share and day after tomorrow you sell it. So the transaction is happening. Share of Reliance is coming into your demat account and you'll have to pay for it. Second is annual issuer charges, which is completely cash for CDSL. They earn a lot of money, these charges, issuer charges. Listed companies pay annual issuer charges. For example, Reliance, Kotak pay certain amount to CDSL for being custodian of their shares. Remember that even though shares are traded on stock exchanges, they are stored in depositories which require complex data warehouses that need maintenance. Third point, online data charges for KYC. KYC is nothing but know your customer. Opening a bank or demat account or even investing in mutual fund requires a KYC process. It is a security verification process used by banks and companies to avoid financial fraud and money laundering activities. CDSL is the largest KYC registration agency. In India, it holds 60% of market share. Other services include transfer of securities during IPO, host annual general body meeting, and e-voting. So it earns money from all these sources. More and more companies getting listed in stock market will have to pay for CDSL. More and more people opting to trade or doing more transactions will ultimately have to pay for CDSL. As a result, we expect more revenue in upcoming future. So what can we conclude from here? Currently, 8.5% of Indian population trades stock market, but as we go ahead, we can see more and more people getting involved and trade more. So as a result of this, CDSL can see its revenue to go up, which would ultimately result into higher EPS and higher stock market prices of CDSL. Hope you gained a lot of insights from this video. Please like and subscribe to gain more such insights and stay tuned for more such videos. Thank you.